What is going on, everybody? Welcome back to the channel. And in today's video, I want to go over volume profiles once again. As you guys know, in my last video, I talked about making a new playlist for the channel specifically dedicated to volume profiles, being that it is such a useful tool and basically a cheat sheet for trading. So I did want to dedicate an entire playlist on the channel just for volume profiles. And in today's video, we're specifically going to go over the different shapes of volume profiles because there are different shapes. Not all volume profiles are created equal. So I want to show you guys the different types of volume profiles that you can have depending on what the price action is doing and the different ways to trade each one of these different shaped profiles, because some of them are more bearish, some of them are more bullish, and some of them are just neutral. But before we get into it, make sure you hit that subscribe button, smash the like, and click that notification bell so you don't miss any of these great tutorials or urgent market updates that we upload to the channel. So before we get into it, I do just want to mention the different types of volume profiles, or at least the most common that you'll run into. So first, you have the most common type of volume profile, and that is the bell curve or D-shaped volume profile. Now, I'm going to pull a picture up of a D-shaped volume profile, and with these D-shaped volume profiles, they are basically treated as a neutral volume profile. So these are not likely to break bullish more than they break bearish, or vice versa. Basically, these are neutral volume profiles. And in just a second, once I go over the different shapes of volume profiles, we'll jump right into the charts, and I'll show you guys how to trade these because you do trade them slightly differently. So number one, most common, is going to be the D-shaped volume profile. And again, that's more of a neutral volume profile. Now, on the other hand, you have a lowercase B-shaped volume profile. Now, these profiles are actually a bit more bearish, so you would be just a little bit safer maybe shorting the highs on a lowercase B-shaped volume profile, but just remember that these are overall lean a bit bearish. These also typically pop up after an impulse move down and then some consolidation, and we'll take a look at that in the charts in just a second. Now, another type of volume profile will be the P-shaped volume profile, and that is the opposite of the lowercase b, and these are typically bullish and normally pop up after a big impulse move up and then some consolidation, or typically pop up when you have something like a bull pennant or a bull flag forming. You will see that P-shaped volume profile. Now, these are more of a bullish volume profile. As I said, these types of volume profiles, you will be a little bit safer longing the lows. And then another type of volume profile that you will run into, these are not as common as the previous ones I just mentioned, and that's going to be the uppercase B-shaped volume profile. Now, this actually is kind of like having two D-shaped volume profiles, or those bell curve volume profiles, on top of each other, giving you kind of two volume profiles with a little bit of a gap in the middle, making that uppercase B shape. And with these, I like to personally treat them as kind of two separate volume profiles. So I don't really see these as really bearish or bullish, but I will lean a little bit of weight depending on where the POC is. So if that point of control is at the top part of that B, or that first little loop of the B on top, I will favor that as the more likely place for price to stick. Because if you guys remember from our previous volume profile video, you will know that your value area does act as a magnet, but even more specifically, the point of control acts as a magnet. And if you have no idea what I'm talking about, go ahead and watch our previous volume profile videos where we talk all about the basics of volume profiles, what the point of control is, and what the value area high and value area low is. So if you have not watched that video, I would definitely recommend going back and watching through those videos first so you get caught up on how to use volume profiles and what they are, and then you could come back to this video and learn about the different types. So without further ado, let's go ahead and jump into the charts, and I'm gonna bring up a couple of examples of these different shaped volume profiles and how I tend to trade them. Like I said, obviously some of them you want to lean a little more bearish, and the other ones you want to lean a little bit more more bullish, and we're going to get into that right now. So here we are on the Bitcoin 30-minute chart, and the first one we're going to take a look at is going to be that lowercase b-shaped volume profile. And as you can see here, I think you could immediately see what I'm talking about here, and you see how low your volume is right here. I'll try to circle it for you so you can get a better view. So there you go. Your volume's very low here, and then you have a big peak in volume right here, kind of giving it, drew it in a horrible way, but this is where you get that B shape, right? So when you have a volume profile that is shaped like a lowercase b, like this one is, you're going to be a little bit safer to short the highs or short the retest of the point of control to come lower, right? Because this type of profile typically pops up when you're creating a bear flag. And you could kind of see here that if I get rid of the volume profile and this line, you can see that we get that big impulse move down like I was talking about, and then some consolidation. Now, this isn't the best example of a bear flag, but typically when you have an impulse move down and you start to consolidate like this, a lot of times you can have a continuation to the downside. Now, if this were to be a little bit of a cleaner bear flag, I would like to see it, more like this, where you come down and then you have price consolidating. So this is a little bit messy, but like I said, a lot of the times when those lowercase b-shaped volume profiles pop up, it's when you get that big impulse move down and then you start consolidating. So a lot of times it pops up when you have a bear flag forming on your price action. And like I said, you're going to be better off with shorts when you see these types of volume profiles. And I'm going to go ahead. We're using the bar replay mode on TradingView. I want to go ahead and just kind of move forward in time here. So basically how I would go ahead and treat this volume profile is, number one, I'm already kind of expecting price to potentially continue to the downside because you could see right here on Market Cipher B, your money flow is generally coming out. Now, this isn't a strategy video, but you obviously don't just want to trade based off of volume profiles, even though they could be very, very powerful. You obviously want to add some confirmations and other forms of TA to make you more confident in your positions, but you could see your money flow is coming out, as well as, just the fact that you're coming down and consolidating. A lot of times when this happens on price action, you wind up losing the levels and coming lower. But, when you see this B-shaped volume profile, obviously you come down, you test the value area high, and then you come all the way down to the value area low. And granted, you could have shorted this and got a ride up to the value area high. If you know how volume profiles work, this is a great way to trade, a great way to use volume profiles when trading in a range. But you would be much better off shorting the highs. And now I say that because if you take a look here, let's go ahead and say that, let's go ahead and grab a short position, right? And let's say we shorted this value area high. So I'm just going to drag, I'm not going to go over stop losses or anything. We'll just say your stop loss is up here. Your profit target is going to be about, let's say 6% or 7% or so. And let's see, right? So you take the ride all the way down, you come to the value area low, you lose the value area low, and then you come all the way back up. But notice you did not come back up to your value area high marked by this white line, or where basically our entry is, right? So you didn't come back up to the value area high. You came down, rejected off the value area high, came below the POC, rejected the value area high again, almost came back up, and then you get stuck below that POC, and now you're stuck below that point of control. You can't get back up, and let's go ahead and move forward in time and see what happens. So you can see here we lose that value area low again, and I'm going to keep on moving forward here. Obviously, okay, so computer's lagging a little bit, so I think it's because this position is here. But you could see we absolutely lost. I'm going to delete this. We absolutely lost that value area low, and then we absolutely dumped, right? So here you would have entered right here on, the test of the highs here. And again, this is not a strategy video. I'm just bringing up that, I want to make the point that you're better off shorting the value area high or the retest of the POC, which obviously moves as price action, continues forward. Obviously, the point of control was a little bit higher before, but you want to short these highs on these lowercase b-shaped profiles because it is much more likely for these to, even if you range around a little bit, they're much more likely to dump down to the downside. So again, lowercase b-shaped volume profile, you see it right here. Boom, boom, that's your B. And you can just remember that these are typically bearish. I'll even put the little hole in the middle. But just remember that lowercase b-shaped volume profiles, you're much better off shorting the POC or the value area high. Now, I do just want to bring up one more example, and you guys can see here our volume profiles all the way up here, and we have very little volume when you have that big candle, that big red candle to the downside. You have very little volume there, and then you have somewhat of another B-shaped or lowercase b-shaped. Sorry, that bubble letter is absolutely atrocious. But you have that lowercase b-shaped volume profile once again, and same thing's going to be at play here. You're going to be better off shorting the value area high or the retests of the POC. Now, obviously, if you shorted the retest of this POC right here, you would have gotten a move to the upside. You would have taken a little bit of a ride, but then you come back in and then you get stuck below that value area high. And let's go ahead and move forward and see what happens. You get faked out to the upside once again, and then you lose the value area. This is a much better example of, showing that these lowercase b-shaped profiles pop up on bear flags, right? So these typically do pop up. You get a big impulse move down, right? And then you get a little bit of consolidation. So that's why I always say you want to do other types of technical analysis. So I do just want to give you guys one more example of a lowercase b-shaped volume profile. And you can see here, we get another impulse move down, and then you get your volume all here at the bottom of your volume profile, giving you that lowercase b-shaped volume profile. And again, you're already leaning a little bit more bearish here. You're going to be safer shorting the value area high or the retests of that point of control, that white line right there. Now, this is a much better example of these types of volume profiles popping up on bear flags, right? So this is basically a textbook bear flag. You get a big move down, you start to consolidate like this. So if you're doing those other forms of TA, this is why your confirmations are so important. If I'm looking at this, I'm already see the move down, I see the bear flag forming, right? Then I pull up the volume profile, I see that lowercase b shape. I know that bear flags typically break to the downside, and I also know that this type of volume profile, I'm much safer shorting the highs. So let's go ahead and say that we want to go ahead and put a short position here. We saw it wick up to the value area high, so we want to get in. You're never going to get that perfect entry. So let's just say we get in a little below that. We get in a little bit below that value area high. And let's say for beginners, we want to, just target the value area low, or you could target the bottom of the bear flag. Either one, would be likely for you at least to come down to. But let's go ahead and move time forward here and see what happens. So you get a little bit of a ride here. Technically, again, not a strategy video, so I'm not setting these stop losses, exactly where I would set them. This is kind of just to give you guys a visual aid of I'm just pulling this up to give you guys an idea of what a trade would look like, and then the areas you could target, right? So you do come out of the value area just a little bit here, but we know, you're testing the top of that bear flag, right? So maybe you want to put your stop loss a little bit above that bear flag, but it's not a stop loss video. I don't want to get carried away here. Let's just go ahead and say we don't get stopped out, right? Come up to the top of the bear flag, still looking like we could definitely, come down here. We are not breaking out of this bear flag just yet. Maybe you want to wait till you come test the top of the bear flag to get into your trade, and then maybe you get in there. You get a better entry. Either way, this is still, we know, likely to break to the downside. So let's go ahead and continue to move forward. You see, I'm going to move this just to make it easier to see. We are getting rejected from the bear flag, from the top of that bear flag, and coming down to test that value area high as support. We lose the value area high. Now we're coming towards that POC. We're starting to lose the POC now. And now we get a little bit of a bounce, come back up to the value area high to test it as resistance. And we start getting rejected back to the top of the bear flag. Wild ride. But I wouldn't really be getting worried here just yet until you get a clear breakout retest of the bear flag and a continuation to the upside. But let's just keep moving on back to the POC, a bounce back to the value area high. This is why it is so important to erase your emotions from trading, guys, because it is always a bumpy ride. Price action is messy, so stick to your plan. We know we have a bear flag. We know we have the bearish leaning volume profile, and we have not gotten the bear flag invalidated, so we're sticking to our plan and we're holding on, testing the value area high once again, back down to the POC. Now you're below the POC. and you're coming down. You come back up. This looks like some stop hunting, in my opinion, but let's keep on moving forward here. Eventually, you see here, guys, you don't even close the 1 hour candle above the bear flag, and then you get that big rejection and you break out down and out of that bear flag, which we know is obviously the more probable situation here, because bear flags break down more than they break up, and we break down to lower prices. So if you were, whether you got into your position, at the value area high or the top of the bear flag, it would have been a great trade. You could have gotten, between let's say about 5%, right? So if you're using leverage, right, you're using some low leverage, guys, be responsible. No 100x over here, but maybe you're using 5x leverage, something like that. You could turn that into a decent move, and I don't actually know if we wind up coming further. And yeah, you just continue to drop here. So we knew, just to give you guys the basic takeaway here, you come down in an impulsive move to the downside, forming a bear flag, getting that bearish leaning volume profile. And so we know bear flags break down, volume profiles break down, boom, we get the move. And just to add some confirmation here, guys, you do get that money flow crossover on the 1 hour to the downside, very shortly before you get that big dump. So confirmations, guys. Now let's move on to our next type of volume profile, and that is going to be the P-shaped volume profile. So we have very little volume here. You can see that, and then most of your volume is up here at the higher end of your volume profile, giving you that P-shape that we were just talking about. And like I said, these are the opposite of a B-shaped volume profile, and these typically happen in the opposite situation. When you get a big impulsive move to the upside with some consolidation, this is where you get those P-shaped volume profiles. And with these, you are much safer to long the value area low or the bullish retest of the point of control. So let's just take a look at how this plays out. I don't want this video to be 2 hours, so I'm gonna actually kind of move this one along a little bit quicker. So let's go ahead and move time forward and see if we can get a little closer to that value area low. Now, to be 100% honest with you, I don't know if we're going to make it all the way down here. So let's just go ahead and put in a long position here. Maybe the price comes back down to that value area low and we go for a little bit of a ride. But, if you have your stop losses set properly, then you should be fine. So let's move price along and see what happens. Oh, we might. Okay, so we did not come back down to the value area low, but now we are in the green here, testing that value area high. Now, I also want you to realize here, I'm going to move this over just to kind of give you guys a better view. Now, this is what you would not want to do. We know we have an uppercase P-shaped volume profile. You do not want to short the highs. Granted, if you shorted this high, you would have made a good move. If you know how volume profiles typically behave, you could probably make some money shorting the highs here, riding it down to the POC or the value area low. But again, for those bigger moves, you're gonna be better off longing the bottom. So let's go ahead and move price forward and see if this thing can break out. Let me move everything back over here and let's see. And boom, we get that breakout and price comes higher. Obviously, I knew that was going to happen, guys. This is not live prices. This is bar replay mode, so we knew we were going to break out. This is for example purposes only. But you could see here that we would have longed all the way down here, and we would have gotten that nice move to the upside, and we broke out of the value area, bullishly retested, and then we came up higher. So the simple takeaway here is when you have that P-shaped volume profile, you know you are safer to long the value area low or the bullish retest of the POC rather than short the highs. Now, I want to move on to our next type of volume profile, and that is going to be the D-shaped volume profile, and you can easily see that here. I think you guys probably start moving along a little quicker. I think you guys are probably understanding this. You can see here, you get that D-shaped volume profile where your volume gets bigger and bigger and bigger as you get to the middle, and then you have your POC, as you can see with that white line right here. And then as you come down, you start to lose volume, and that is your D-shaped volume profile. So with these, this is more of a neutral volume profile, and for this, you simply would want to long the bottoms, ride them to the tops, and then short the tops and either target the POC or the value area low. Again, you want to use other forms of TA. You don't just want to blindly trade off volume profile. And by using other TA, you can, avoid getting into bad positions where you might be trying to short this all the way down to the value area low, and then you'd probably get stopped out over here. By using the other indicators and other types of TA, maybe you're using Lux Algo, maybe you're using Market Cipher, maybe you're using both like I do. If you're using these things, you should be able to avoid bad entries. So typically with these, what I will do is, if you come down to the low, say like we did right here, I would, you can long this, right? And then target the POC to take out a portion of your profit and then either let the rest ride, or you can move your stop loss into profit. Granted right here, you would have come down, if we got in here, took the ride, took some profit here, moved our stop loss up, we would have gotten stopped out in profit here. However, never, when you're coming off of the value area low, it's never a bad idea to make your first target that POC, because again, if you guys have seen my other volume profile videos, when you come down to when the value area low acts as support, it's likely that you revisit the POC. And you can see this happen multiple times. Value area low acts as support, ride it right back up to the POC. Now you get rejected from the POC. You would expect a visit to the value area low. It's exactly what you get. This acts as support. You come up, come down for a double tap right up to the POC, and then you break the POC, in which case you would be expecting to come to the value area high. That's exactly what you get. You get the rejection, come right to the POC. I think you guys get the idea. So these are generally neutral volume profiles. And again, you would just want to, short the highs and then long the lows, right? So here is somewhat of an example of our capital B-shaped volume profile. Now, this is not the cleanest example, but basically this is what it looks like. You have a big area of volume here, and then you have another big area of volume there. Like I said in the beginning of the video, you basically get two bell curves or two D-shaped volume profiles here. And granted, this is not the prettiest example. What's important to know here is essentially I treat these as two different volume profiles. And you notice that our POC is up here. So maybe I put a little bit more weight on the area with the POC because price does tend to get sucked to that POC. However, one thing to know about these capital B-shaped volume profiles is that you get a big gap here. Now, with these big volume gaps, I'm going to make a video just dedicated to these volume gaps, and I actually already have. I do want to make an updated one. However, with these volume gaps, this means that not a lot of volume was traded here, meaning this is not an area of interest for price, right? How that manifests itself in price action is you can see here we have levels of support. I'll draw a horizontal line right before this big gap, right? So typically when you have these big gaps, right, you have your high volume node right here with your point of control. I would treat this as basically a neutral volume profile. You can long the lows, ride it up to the POC, right? And then when you come up to the highs, you can short the highs and ride it back down to the value area low, long the lows, target the POC, and then you would target the value area high if you flip the POC to support. However, if you start to lose this level where that low volume gap starts, this is where you can expect a quick move, right? Because you don't have any volume here holding you up. There's no support down here holding you up. That's why there's no volume, right? No interest in this level. Price does not want to trade here. Price is naturally attracted to the high volume nodes and the value area, and more importantly, the POC. So when you break this level, as you can see right here, you break down from that level. And once you enter into that low volume area, right here, right? You enter that low volume area, and what do you get? You get a massive dump, a very violent, quick dump, because there's no support or resistance holding you up here, right? So you tend to fly right through this area and break down. And once you start breaking down from here, the cool thing about this, and the reason why I call volume profiles a cheat sheet for trading or X-ray vision into the market, is you know that if you lose this level, there's nothing underneath you. So you can expect that quick move down. So you lose that level, you can get into a nice short position and target your next area of high volume or your next high volume node, which would be, right here about, I would even actually target the top of this high volume node right here. And actually you can see, we actually flew right down and almost got a perfect bounce off of that level before coming down and ranging near this high volume node. So before I wrap it up here, guys, I do just want to reiterate and kind of break things down in a simple way. Remember that the price is always attracted to the value area, right? So that's why when you break down from the value area low right here, typically, although this is a bearish volume profile and you would be better off shorting that value area high or the retest, like right here, that retest of the POC and expecting that breakdown, typically when you lose the value area being the area between the value area high and the value area low, this purple box would be considered the value area. If you break down, price wants to get sucked back into the value area, because you could see here, you also have no volume down here. So if you're not bringing any new volume in on the profile, you're gonna get sucked back into the value area. So just remember, the value area acts as a magnet, and more specifically, the point of control acts as a magnet. So with this being a bearish volume profile, if price were to get sucked out of the value area to the upside and you're not bringing volume in, you know it's likely that you get sucked back into the value area, because this is a bearish volume profile. This is where all your volume is. This is where the high volume node is. This is where the POC is. This is where the value area is. This is where price wants to trade. So when you get sucked out, expect to get sucked back into the value area. And that's an easy way to remember what shapes are bullish and bearish. Because if you come over to the P-shaped volume profile, you know that if price drops out of the value area here and you still have very low volume here, you know that price is going to want to get sucked back into the value area. So that's kind of how you can think about it. When you have a P shape, the reason you want to long the bottom is because even if you come below, you're most likely going to get sucked back into the value area anyway. So, and on top of that, the value area low is likely to act as support. So just remember that if your value area is at the upper part of your volume profile, if your value area, meaning between the value area low and the value area high, is at the upper range of your entire volume profile, you know that is a more bullish profile. Because if you break down, you know you're gonna get sucked into the value area. So guys, I know this was probably a little bit of a long-winded video, but I really wanted to break down these volume profiles, and this is just the beginning. We haven't even gotten really into the nitty-gritty of the different types of volume profile tools. I've touched on them generally, but we have not really dove in just yet. So stay tuned for some more volume profile videos. Just for a little recap, you have bullish volume profiles. Again, lowercase b is going to be a bearish volume profile. The P shape is going to be a bullish volume profile. Your most common volume profile, the D-shaped, where you can long the lows and short the highs, which is a neutral pattern. And then you have that uppercase B-shaped volume profile, where you basically have two volume profiles separated by a volume gap. And if you break that volume gap to the downside or the upside, you can target that next high volume node and expect price to shoot through that gap. So I hope that wasn't too complicated. I hope I was able to break that down in a super easy way for you guys. If you have any questions, definitely drop them in the comments down below. With all that being said, guys, I think that's all I got for this video. I'll see you in the next one. Frankie Candles out.
Here we go, at the top of the class on a roll. And it's time to run it up, yeah, you know. Maxed out, put the pedal to the floor. Ayy, on the road, here we go, here we go. Yeah, we winning by